All right, all right, all right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Thursday. It's Thursday morning In Circle Live session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody's doing well today. All right. Fun week. Getting ready to wrap it up, but we got some things happening today that should give us a little bit more insight into this inflation conversation. All right. So, as always, let's turn off all distractions, prepare your minds and your bodies to engage as you guys always do. And for the courtesy of everybody on the call, please ensure that your mic is muted if you're not actively asking a question or making a comment. All right. So let's get to it. So what we're going to do today is we'll take a quick look from a fundamental perspective, and we're going to update the dollar pairs. But I want to hear from you guys, right? And what I want to kind of chat about as we're updating these dollar pairs is I want to know where you are currently in your process. What are some things that you might be struggling with? Right. So we can take a look at those things as we're updating the charts this morning. So before we get started, just to make sure, drop me a one in the chat if you guys can hear me okay, and if you can see my trading economic screen. All right, cool deal. So start formulating your questions in your mind, right? As we talk briefly about the fundamental side of things. All right. So all of the headlines basically say the same thing. European stocks hold their breath ahead of US CPI. US inflation seen lower, but core is going to match a 40-year high. Dollar steady ahead of inflation data, right? Things are paused ahead of the CPI data that is set to come out this morning at 8:30. All right. So not much really doing across the market. Okay. 10-year yield hovers at 14-year peak, right? This article is just going off of the estimates and the expectations for the inflation data, saying that the core CPI data is set to rise, right? Pushing the annual inflation rate to 6.5%, matching March's 40-year high, and assigned inflationary pressure remains elevated, right? So that's the expectation for today. So that's it from a fundamental perspective. Over to the calendar, right? Didn't have much happening overnight. Swiss franc PPI came in above expectation. And this is what the market is waiting on, right? So what we'll see is a lot of sideways movement. Some of the pounds did push up a little bit, but overall it's just been paused, waiting for this data. All right. So that's it this morning from a fundamental perspective. Are there any questions about the fundamental side of things? No? Okay. Take a look at one thing here. Okay, cool deal. So to look at the dollar index, right? See it from last night. It's just hovering, right? Just pushing sideways here. Okay, just shy of the D extension. Okay. So not much movement there. All right. So before I dive deep into these dollar pairs, and this is for everybody, newer members and our seasoned members, right? What are some things that you're either working on right now, working to develop, working to understand better, or what are some things that that you might be struggling with, right? You might having issues making those connections. Second entries. Okay. What Joy are you looking at? Is that something that you're working to develop, or working at, or something that you're struggling with? And we can walk through some of those, potentially some examples. Develop. Okay, sweet. All right, so let's take a look at the. We'll update the dollar Swiss first since it's here. All right, so let's pop back to. I'll keep that in mind, Joy. Keep the thoughts coming if you guys have them. All right. Unless everybody is 100% set in their trading plan and everything is in place and they're all set to go. So, dollar Swiss, right? Been pushing to the upside. Okay, pushing to the upside. We broke through these levels here, right? Actually, what I want to do, we'll do a fresh markup on this one. Previous high. Yeah, we'll do a fresh markup here. Bounce to the monthly time frame. We'll talk about those entries, Joy, when we get to some of the other pairs. But fresh markup here, all-time high, all-time low. Okay. Drop in our support and resistance. Oops. Like so. Okay. Got levels here. All right. Levels here, levels here, here, and here, and one more there. Okay. Want to work around the first time. I got you. The first in, first out rule. Yeah. Okay. That's an interesting one to have to work through with those brokers. So I definitely understand that for sure. So newer members. This is an open forum. All right. This is an open forum. So questions are welcome. Nobody's perfect in this space. So if you're hesitant to say you need help, I'll be the first to let you know that I probably make more mistakes every day than your average person. But I seek to do that, right? Because those are the areas and those are the times in which you learn, right? So no one is perfect. Perfection does not exist. So if that's what you're afraid of not being perfect, understand that this is a space that we talk about daily, is challenging yourself to make mistakes, right? Challenging yourself to make mistakes because perfection is non-existent. There's not a way for it to exist because everybody has their own perception based on their previous experiences, right? And nobody's experiences will ever be the same. So if nobody's experience can ever be the same and everybody's perception will always be different, there's no way for perfection the way that it is currently used to exist, right? So if that's a fear, I understand it, but I'm here to tell you that it's not real. It's a fallacy. It's a fallacy. So it's something that you can work through, something that you can change mentally, right? And in order to work through some of the things you may be going through personally, right? You have to be open to looking at things differently. Okay. So we got a support and resistance on the monthly, weekly, and daily time frame. Okay. So now we're going to look at things from a Fibonacci perspective to see where everything falls.
Hey, Ryan. Good morning.
Miss Ebony, good morning.
Yeah, I'll share. Hold on. I'll share mine's always been risk management.
Yeah.
Because I know what I'm seeing, I know what I'm looking for, but I just want to go into the market like a drug dealer at times. So, what I'm doing right now, I started the 5%ers challenge this week, and so what I like about that is that you have to you can't enter a trade without a stop loss. So I'm using that account more as a conservative account. And then I also have a demo where I got to feed that beast and I use the demo to do that with, but then use the 5%ers just to stay real conservative there. But yeah, so just working on risk management and being consistent, like actually taking the trades and not just marking them up.
Awesome.
So yeah.
Awesome. Thank you for sharing that. So in your account that you're feeding the beast, what are you still calculating your risk just with a larger account?
No. And sometimes if I see something that's like really like quick, I'll just take it and then put a stop loss. I mean, not a stop loss, but put a take profit. And sometimes I'll do a stop loss, but it's really just to see the moves play out, to see did it play out or not in the demo.
One of the things I'll challenge you is on that account that you're feeding the beast, still calculate that stop loss, right? Because you still want to develop that habit, right?
That muscle.
You still want to develop the muscle. So maybe what you do is you get a demo account with a larger balance, right? And you then calculate your risk with that larger balance, and you'll be able to see, because what it'll challenge you to do is still have proper risk to reward ratio. But when that account does go into the negative and drawdown, right, some of those positions, you'll be able to understand how you feel when that happens with a larger account. So in this space, right, as you continue to grow your account, and Benny and I have had this conversation a lot, even as you scale that account up, there's still a psychological shift that has to be made, right? So when you get to the larger account size, you're gonna have a larger drawdown, still the same percentage, but you have to get comfortable seeing that larger number in red, right? So what may have been $10 on a smaller account might be $100 or $1,000 on a larger account, right? Still the same percentage of risk though, right? So that's what I challenge you to do, because that muscle still has to be built, and you still want to make sure that you're getting comfortable seeing the incremental changes in that dollar amount when a trade does go into drawdown. Does that make sense?
Yeah, that makes sense. The psychological, seeing the big numbers. Yes.
Yeah. So
I'm gonna try that.
Yeah.
Thank you.
You're absolutely welcome. Great work, and congrats on stepping out and taking that next step on the Fibers Challenge. And like I said, let us know if you what you're working through on that, and we're here to support you in that. Okay. Great work though. So here, right, pushing to the upside, 786 retracement, matching the extension is here at 102 off the daily time frame. Okay. So price moving to the upside, we got the sideways push right now. Okay. So as we drop down in the time frames to the 4, right? Our fibs get taken out in this consolidation. We had a head and shoulders type pattern here, and we're pushing to the upside now. We'll run our fib off the low, like so. And that's where our 4-hour fib sits, right? 382 retracement matching the extension is here. Okay. Just shy of that weekly resistance level. So pushing to the upside, we'll see what happens today with the CPI data that comes through. Okay. So that's on the 4, drop to the 1, and we'll run one more fib off the low, like so. Okay. So this is where we sit here, 382 retracement, matching the extension is there at $1. Okay. So pushing to the upside, we'll see how the market responds as we move through the morning. Okay. So that's the dollar Swiss. Herman, how can I get set up with charting too? So if you want to use Smart Trader, there's a link in the community for you can get a trial on Smart Trader for, I believe it's $4 or $5 US. And you can utilize Smart Trader if you want to use that. If you don't want to use Smart Trader, there's other charting platforms out there. TradingView is another popular one if you want to use that as well. But you just go set up an account and you can start marking up charts. So that's Smart Trader and TradingView are the two that we work with. We primarily focus with Smart Trader. We do have some traders that do utilize TradingView still, but we utilize Smart Trader due to the technology that it has with smart support resistance, Fibonacci tool, smart fib, and some of the other tools that it has. So that's why we use Smart Trader, and it helps us with our overall analysis and the speed in which we're able to move through things. And helps us to be more efficient. So account never use it. Should I connect Trader 4? MetaTrader 4, yes, is the overall what is it called? The trade processor, for lack of better terms, the middleman that you're going to be able to actually take your trades on. So yeah, you either want to use MetaTrader 4 or MetaTrader 5 to start actually taking trades in the demo account. So broker recommendations, we don't give those. There's a lot of legalities behind it. So you want to do your research on brokers and find ones that meet your criteria when it comes to the fees that you have to pay and the cost to transact trades. It does not matter what country you're located in when it comes to the brokers. So you can, some countries may be different, but from a U.S. perspective, we can use brokers from any country outside of some of the stuff that's happening with the war. But yeah, you can use brokers from anywhere to open your account with. Curious about some indicators, SAM and EMA. What's your experience with them? So to be completely honest with you, I don't use moving averages independently. I don't use very many indicators at all. I have used RSI indicator in the past, and Benny uses that quite a bit. Benny uses some of the moving averages periodically, but I don't utilize them. I use my 2 eyes. They do. There's a lot of traders that do use them, especially from a higher time frame perspective. Your 50 and your 200, and they use them as indicators of support and resistance. And when price breaks through them, those are key indicators that are used. But at the end of the day, they're lagging indicators. So I've just trained myself not to use them and just go by what I see on the chart, with support, resistance, trend lines, and the Fibonacci tool. And I wait for things to meet my rules from that perspective. But you definitely can use them. And they just as additional confirmation points, right? Not as an end all be all, but I would say drop some onto your chart and test them, right? Like I said, 15 to 200 are two of the more bigger ones, primary that are used. And this 200-day moving average. So, yeah, definitely drop them onto your chart and see and use them as additional confirmation. I'll bring that up tonight with Benny and see if he can give you some insight from his perspective, because he actually uses them. And he'll be able to give you a lot more insight than I am, because I don't use them. So good question. Last night. Yeah, sure. Controlling the emotions is key. Controlling the emotions is key for sure. Let's take a look at the dollar CAD. Dollar CAD. This is what it looks like on the 1 hour time frame, pushing to the upside. We got a 618 retracement on the one. Matching D extension is here at 140. All right, so let's drop back to the daily time frame. And this is where we sit, right? Got a new AB boundary here. Let me double check this fib real quick. Back. There we go. That's the fib I wanted. All right, so on the daily time frame, 236 retracement, we're getting somewhat of a double top scenario here. This daily resistance level, the B boundary. So we want to see, right? After the news comes out, do we get a break above this level, continue higher, or do we break down and push back down to the downside and get more of a retracement out of the dollar? Okay, so that's one of the things we want to see at this level here. Herman, Smart Trader, they do have some they do have some brokers that they do work with, so you'll have to check when you set up your account. You'll be able to see what brokers they work with. I believe most of them are US brokers, but you can check that out. They do have some, and you can't execute your trades on here if you do have a broker that they do work with. I use it sheerly for a charting tool, and I implement everything into MetaTrader 4 or MetaTrader 5, and I go from there. So, yes, you have to pick a broker. Brokers are separate from anything else, and you want to install those into MetaTrader 4 to place your trades. Brokers are going to be completely separate. Smart Trader is just a charting tool. They do connect with brokers so that you can trade on the platform as well. But Smart Trader is just a charting tool, charting platform, and they have some education on the back end too. Destiny, good question. Starting off, is it better to focus on a few pairs only or go through them all? So my recommendation is to go through them all. And the reason that's my recommendation is because you want to get the repetitions, right? You want to be able to get the practice in. And if you only mark up 1 or 2 pairs, you're going to have limited opportunities to go through those repetitions, as opposed to going and marking up all 28 pairs and going through that process on multiple time frames, right? So starting out, I believe it's really, really, really important to mark up all of the pairs so that you get the practice necessary, right? The thing about this space, and really any space from that matter, is the more you do it, the better you become, right? So you don't want to limit the number of times you can mark up these charts. When I was starting out, I've told the story quite a bit. I used to mark up my charts every day. I'd clear them out and remark them every day, right? Just so that I could get the repetitions and the practice in to seeing the movement, to seeing the levels, right? Seeing the swing highs, to be able to get more comfortable with what the chart is telling me, okay? You don't have to place trades on all 28 pairs, right? And all 28 pairs won't have a trade that meets your rules at the beginning anyway, right? So, and that's where a lot of people, they get caught up, is they think, since I marked it up, I have to trade it. No, you don't. If it doesn't meet your rules, then you don't trade it, right? So it's just from a practice perspective and get the repetitions in that it's really, really important, especially at the beginning, to mark up all 28 pairs. Okay. You don't have to trade all 28 pairs, but marking up all 28 pairs for the practice is extremely important. Okay. Good question there, though. Right. And then as you get more comfortable and really solidify your rules, then you can say, okay, right, I see the swing highs, I see the swing lows. I'm comfortable utilizing the fib. I understand the levels. I understand entries in take profit levels. Now I want to break this down, and I only want to trade ABCD pair, right? But at the beginning, the repetition is, Benny says all the time, repetition is the mother of all skill. Right. So it's all about the practice, all about the deliberate practice, right? The deliberate practice to develop the skill that you desire to develop. So, yeah, MT4 and MT4 are no longer available on the Apple Store. If you don't have it downloaded already, I have to do that research. I have to do that research to find other tools to implement trades on. So I say, if you have it already, keep it. You can still use it if you have it. If you don't have it, I'll get back to you on the answer to that. That's a new development based on some of the things that are happening with the war and trying to limit some of the access. So I'll get back to you on that one. Good questions, though. DeJuan, good morning, bro.
Hey.
You doing all right, man?
I appreciate you.
Hey, no doubt, man. We appreciate you, dude. Glad to see you.
Thank you for having me.
You're welcome. All right. So on this dollar CAD, right? On the 4 hour, we got a 618 retracement. We're just hovering right here at this daily level, right? So that's the level we're watching throughout the morning. After that CPI data comes in, if the dollar retraces, you'll see this dollar CAD push down. Okay. Now, if the dollar pushes up, if that core inflation number comes in hot, we'll see this thing push to the upside. Okay. We'll see it push to the upside, likely at some point get to that D extension of 140. You're welcome. Right. So this is the level that we're watching. So this is how my chart looks. This is what we're sitting, we're waiting on. Okay. Drop to the 1. And that's what the look is on the 1 hour time frame. Okay. Similar to that 4 hour. All right. So that's the dollar CAD. That's the updated chart there. Any questions on the dollar CAD? No? All right. Cool deal.
Ryan, what's going on?
Benny, good morning, bro.
Good morning, sir. Good morning, everybody.
Glad you're able to jump on, man.
Oh, yeah, absolutely. Glad to be here, as always.
Heck yeah, heck yeah. Hey, we had a question a little while ago about moving averages. I don't utilize them, but you do. Do you have any insight on SMA and EMA, which ones to use and time frames?
Oh man, the time frame is still based on what you like to trade. They're taking the average. So if you have a 20, say simple moving average, just a little different calculation between your simple and your exponential. I typically have always just used simple moving averages if I'm using them. They're just taking the average closing price of, say, your last 20 periods, right? So it's just an average, calculation. And so a lot of times higher, well, I guess you say higher time frame. A lot of your bigger traders, your institutions, they tend to like classic 200 day simple moving, 50 moving average, right? So they look at that crossover, right? So if it's crossing to the downside, you've got what they like to call a death cross. Crossing to the upside, they like to call it the golden cross, right? And it's just helping you, it's just giving you another visual for trend direction. So just an additional confirmation. Of course, if we see moving averages moving directly through price, right, that pretty much means that we're moving sideways, we're ranging. So, you know, as we always say, your best indicator are your own two eyes. They operate in real time. That moving average, because it's an average of, for example, 50 periods. The average closing price of the last 50 periods. So of course it's lagging, right? But a lot of times people use those to help them try to determine trend direction. Some people just use them as an extra, you know, confirmation if they're looking to get in a trade. So say, for example, if you're trading with the trend to the upside and you have for example, a pullback to a 61.8, you may be using, you know, a 50 crossing over a 200 or a 20 crossing over a 200 to add additional confirmation to whether or not you want to take that trade to get long, right? Just like how you have a trade breaking above the cloud, right? We know that the outer lining of those clouds are indeed, you know, average calculations pretty much, except for they take the high and the high and the low and not the close price. So it's a difference in the calculations when you're looking at the cloud, you know, and the calculations that it uses for its lines versus your traditional moving average that are taking the average closing prices. So that's all. To me, I just use it from time to time as just an extra confirmation in regards to trend direction. But honestly, it's not often. I really like to use them on the higher time frames. I do have it where I can use the 200 and the 20 like a crossover type on the lower time frames. But you know, that's it. Just extra confirmation. That's really all it is. But just always know the key is that it's lagging, right? So a lot of the setups that we get into early, based on what we teach, you're already in them before a crossover occurs a lot of times. So
Yep. Appreciate that, bro.
Yep.
Appreciate that. Hope that helped you there. Is it Jeremy that asked the question? Bradley.
No, Brad.
Bradley.
Hey, yeah, it does help. It's kind of what I've been seeing. I guess I just came across a few things online and started yapping about EMA, SMA. So, you know, before I get too deep down a rabbit hole, I'd like to hear some real life experience or opinion. And yeah, I think that paints the picture. It is lagging, and from what I understand as well, yeah, just kind of showing direction of trend and when trend changes type thing. Okay.
Yeah,
Hey,
it
appreciate it.
can. You're welcome. It could help you in regards to, for example, you know, the smaller the average in regards to number, it'll ride closer to price. So if you have like a 20 moving average on the screen riding along price, it can kind of, like, you see how your trend lines are more rigid, right? It's just a straight line.
Yeah.
The moving average kind of hugs and moves more along with price, right? So it has more elasticity than a trend line, right? So sometimes you can use that, right? You can use that for your inner trend line. Like, hey, if I get a break of this 20 moving average, or for example, on the cloud, how you have a 9 and a 26 period. Okay, now it's calculated differently, but it's kind of the same concept. So you can see, for example, Ryan, if you go to check out the NZD USD 5 minute and put your cloud on, if you don't mind.
Got it.
Yeah. Right. You see that nine, right? See how it broke it to the downside?
Okay. Yeah.
All right. So it can kind of act as that inner trend line, but it's more elastic, right? You see how it's not just a rigid straight line.
Yeah.
Okay, and you see how it pushed right back down to pushed beyond the 26, right? It broke the 26 too, right? But you can play that. Like you see how it's kind of see how you kind of have that bubble at that 9. You see how it kind of created that arc and how it got away from that 26 and how price gravitated back to that 26, that Keynesian, right? How it broke it. So you can use moving averages in that way too. Like if you have a 20 and a 200, crossover, a lot of times your 20 period will move away from that 200 and create that kind of arc type effect, like we like to call a bubble. And so eventually price likes to work its way back to that 200 moving average when it gets too far away, right? So you get trade back to that 200, right? So there's different type of cool things that you can do once you gain an understanding of them.
Okay. Yeah, cool.
Thanks.
Yeah, I came across a guy. I watched something quickly. The guy was on the 5 or even a 1 minute chart with three EMAs, a 25, a 50, and a 100 or a 200 or something like that. And yeah, it was kind of wild. It was a bit too much at the moment.
Yeah, people get a lot of pretty deep in the weeds in regards to it all boils around that person's confidence, what they need to see in regards to take a position, to make them pull the trigger. And some people use quite a few moving averages, but they've back tested that, and that's what works for them supposedly, right? Online, it's hard to tell sometimes online, but that's their strategy.
That's their go-to.
Yeah, and those are cool as long as you keep that foundation, right? Because a lot of times they'll say, oh, my strategy is no longer working or performing at the same percentage in regards to strike rate because the market conditions are changing. Well, seasonal. Yeah, it's seasonal. Well, we know that the market moves in waves, so that never changes. So as long as you keep that as your foundation, right, you can be successful with those type of trade strategies. As long as I think if more people really understood that they would understand, like it's got nothing to do with seasonality or nothing, and so don't just definitely don't let that type of stuff seep into your brain. If you decide to to try to work on a strategy that involves those type of things, but so as long as you have a strong foundation, you could be successful with it, and of course, proper risk management.
Yeah, always.
Yep.
Cool.
Thanks, Ryan.
Good deal. Thanks, guys.
You're welcome. All right, so you guys see I'm working through this dollar yen pair, right? And on the daily time frame, we had a shallow retracement. This box starting at this monthly resistance level, which is 146.618, is the 118 to 127 zone. At the bottom of this box, we had a 4-hour D extension level, right? And then you see here on the 1 hour, we got confluence on every level, right? On the 1 hour, you got your 118 to 127 zone here in this zone as well. So looking at this one, right? And this level could also be key when it comes to the Bank of Japan. We'll see if things start to get a little bit more aggressive. But once we get to this level, it's right inside that 118 to 127 zone on the daily time frame. It's a D extension on the 4-hour time frame, and we have a 118 127 zone off of a shallow retracement on the 1 hour time frame. So we got a lot of confluence at this level. This level is a key one to watch, right? And I think the Bank of Japan, they have noted this also 147 as an area that they're watching as well, to ensure that price doesn't move too aggressively to that point. So we'll keep our eyes on this zone here as we move through the day-to-day with that CPI data. See if we get a push up to that level, see if we get a reaction, right? Somewhere in this zone, okay? So I got my trend lines deployed, right? And you can look at it from a trend line break perspective. Once price gets up there, we could see price push sideways, and then we'll see if we get a break back down and a retracement of some sort, okay? But But this is the dollar yen, right? So this is the zone that I'm watching, 118, 127 on the daily, D extension on the 4, and we got a 118, 127 on the 1 hour, right? You can also drop your cloud on, look at it and see if you get the confirmations, or when you get the confirmations from the cloud, right? In this zone, you can look at that for a level of confirmation as well for a potential short entry. If all of the rules are met. All right. So that's the dollar yen. Questions on this one?
Sir.
Cool beans. All right. So let's take a look at the Aussie. Actually, no, let's stay on this side. Go back to this New Zealand dollar. Bounce back out to the daily. Okay. Check these out. So, okay, pull that off for a second. Right. So this is New Zealand dollar pressing to the downside here. Headed to this 54 cents. All right. Pressing down. It's monthly low, all-time low, right? Nothing's been lower than that so far, right? So we've talked about this multiple times, but a lot of these pairs are getting to these extreme levels that we haven't seen in a very, very, very long time. And some have even been broken. So I'll run our fib from the top to the bottom here. We got a 382 retracement. Coincidentally, the D extension comes in line with that all-time low. All right. So price is headed here. It's just a matter of when, right? Just a matter of when. So if we drop down to the 4, drop down here, back, drop our fibs on, might get taken out. Let's see. See what we got. There we go. All right. So that's our active fib on the 4. We're sitting in this 118 and 127 zone off of a shallow retracement. Okay. So if price pushes down to hit that daily D extension, still be in that 118, 127 zone on the 4-hour time frame. Now the question then will be, does this level hold? Right? Or does price just break through this level and continue to the 4-hour D extension as well? Like we've seen on some other pairs, right? We've seen those all-time levels get broken and prices created new lows. Okay, so something we're going to want to keep our eyes on to see if this monthly level holds and we get a reaction, which would be a D extension hit on the DXY as well, the dollar index, right? Or do we break through that level and continue pressing? Okay, so that level is going to be key for us to keep our eyes on. All right, so we drop down to the 1. We'll look at the same thing, and we'll run our fib off the high here. Actually, let me go back. Pull these off. Now we'll go to the 1. Let's see. Don't think these run all the way through, but let's check it out to see. Yep. Stopped out there. Also there. So off the high here. Okay. Okay, there we go. All right, so this is your active fib on the 1. Right, you got a 382 retracement, matching the extensions down here at 55 cents. Okay, so pressing sideways, I'm looking for this just to continue pressing to the downside, bang, right, to get us there. And then we'll see. Once price gets here, then we'll be able to see how we respond, if we create a new low or if we get a reaction, and then we start to get a retracement out of that zone. Okay, so that's the New Zealand dollar there. Yep. And so that's where we're at right now. Okay. That's where we're at right now. 80-20 on the 4. Even with that level getting hit, it'd be essentially new AB boundary on the daily, right? And we'll see if we'll get a reaction there. Okay. Any questions here on the New Zealand dollar?
No, sir.
Herman. So these levels, I generally remark my charts once a month. Sometimes I do it once a quarter. But so these are relevant and recent support and resistance levels, right? This all-time low, that's a monthly support level, right? So on the monthly time frame, that's your most recent support, right? And actually, it's not an all-time low, my bad. Not an all-time low level, but a level we haven't seen. That's a 2020 low. Not an all-time low, but it's a monthly support level, okay, that we're approaching, right? So support and resistance definitely gives you historical insight, right? Is your next support level back from 2009. So if we break this level here from a monthly perspective, 40 cents is your next level, right? And so on and so forth, right? So these are your key monthly support levels as we're moving through the time frames. So they do give you insight into the past for sure. Okay. Price hasn't been in quite some time. It hasn't been this low since 2000. Okay. Cool deal. Let's take a look at the Aussie dollar. Okay. So from a daily time frame perspective, push down to that 118 level, right? And now we got sideways movement, which is expected, right? So we'll see if this level holds or if we break down below it. Okay. So that's what we're looking to see. See if we break that daily level on the 4, right? We got a new AB boundary, right? We're just pressing sideways. Okay. 118 and 127 zones down here below that level. So we'll see if we get a retracement first, depending on the data, right? If we get a retracement and then a continuation down, or if the data comes in hot, you could see this turn over and just press to the downside. Like so. Okay. So from a 4-hour perspective, that's what we're looking at. Okay. Sitting at the B boundary zone. Then on the 1, right, we're looking for a deeper retracement. We got a 382 and price came back down. So we'll see if we get a deeper push here, or again, like I said, we just turn over and press to the downside. Okay, so see if we break this level, it's going to be key. And I think we'll then continue making those lower highs and lower lows, and ultimately get a new fib on all 3 of our time frames. Okay, so this is the look on, take that out. All right, this is the look on the Aussie dollar, waiting to see what happens. Okay, questions here? So when you say trace my pairs every day, what do you mean tracing? You mean marking up the charts? Is that what you mean by that? You do your multi-time frame analysis, right? From the monthly all the way down to, I go down to the 1-hour time frame, but whatever time frame you are looking to enter your trades on. So the process that I'm going through here and that we go through every day, that's what I'm talking about. Starting at your highest time frame and working your way down to the lowest. Okay. You're welcome. Questions on the Aussie dollar? No? Cool deal. Euro dollar. Euro dollar. So I'm gonna go back to the weekly on this one so we have some perspective. Weekly D extension is down here at 93,106. Okay. 93,106. We got a 50% retracement. we're headed to the D extension. Okay. This is a low. Okay. We have some lower levels, right? But we got to break through this monthly support level first. Okay. Once we break through that monthly support level, our next support resistance, previous resistance here, is this weekly D extension. Okay. So at some point, this monthly level could get broken and we'll continue heading lower, right? And then we'll look at those 80 cents levels, these levels down here, to come into play. Okay. But right now, this is where we're tracking. Overall, it's been a crazy move to the downside, right? Almost 3,000 pips to the downside. Okay. Been a beautiful move, right? Beautiful move. So as we go through time frames, we get here to the daily, right? It's at 93 cents level. Okay. And that comes in line with that daily D extension, right? So it's simply just a matter of, do we get a retracement first and then start crashing through levels to head there? Or do we just turn over and press down, right? The data today will give us some insight on that. All right. So from a daily perspective, that's where we sit. Moving to the downside nonetheless. All right. Moving to the downside. So that's what we're looking for. Okay. So as we get to the 4, okay. Thought I had my fib running there. Let's see. There we go. Oh. There we go. Okay, so on your 4, this is what you've got. Okay, 50% retracement, daily resistance level, and we're pressing down, right? Stalling at this previous weekly level, right? Getting some sideways push, right? Could come back and retest this level that we broke through, the strong bearish candle, right? That's that pullback that we could see before the continuation to the downside. Okay. And we see here, right, on the 4, the extension is below that daily level, right? So the daily and weekly level. So as we get to that level, what we could see is another retracement, right? Potentially B boundary, monthly level that we break through, and then see another move, right? The wave sequence, right? Retracements and extensions. Okay. So that's what we're looking at. Do we get this full retracement out of that range back up to that daily level? Or do we break through this weekly level and continue breaking down? Okay. Now down to the 1. Pull the cloud off for a second. We'll run our fib off of the high. So it's going to come over here. Yep. Still going. All right. All of those get taken out. Those got taken out as well. So we're moving back to the upside. So that got taken out also. So back down. And so that's where we sit. Okay. So this is our active fib on the 1. Sitting in the 118, 127 zone off of a shallow retracement, right? Shallow retracement, 118 and 127 zone, you got your sideways push. Okay. At that weekly level. So this gives you more insight. If we get that retracement, this daily level is right in line with the 618 retracement level. Okay. So could get that push up. and then a push down. Okay. So we'll see. We'll see what happens here. See if we break out of that range to the upside, or do we break that weekly level and push to the downside? Daily level 9857. What level are you looking at, Reese? 98576. Support level here. It's not a current support level, but it was support here. You got your swing low. Right. So it wouldn't show up anymore because that level was broken. Right. But this is a previous support level. Cool. All right. That got a sell limit set. Beautiful. Beautiful. All right. So that's the euro dollar. Any other questions on the euro dollar? Let's see what we got here. Has the euro dollar been influenced by sentiment only, or with the war going on, or is there also fundamentals like? So the euro dollar is primarily determined by the dollar itself, right? The strength of the dollar. The dollar index, right? The value of the dollar independently. Well, the value of the dollar compared to a basket of currencies, it's heavily weighted by the euro, right? So the value of the dollar basically determines the direction that this pair goes. As the dollar increases in the value, you'll see this pair push to the downside. The correlation is just a little bit less than 1, the euro USD to the DXY. So you'll see this follow pretty closely to the DXY and the strength of the dollar itself. Whenever the dollar gives a retracement, you'll see this pair go into a retracement. Whenever the dollar extends, you'll see this pair push to the downside. So it's not a commodity thing, but it's the strength of the dollar, right? And the dollar we know is used as a risk on and a risk off asset, right? Meaning that in times where investors are being risky with their money, the dollar can see some increases depending on the scenario, but it's also used as a risk off asset. So when we move into times where investors are looking to protect their funds, right, they'll put them into the dollar as a safe place until things allow them to be more risky with their investments. So that's where we sit there. Yeah. Jeremy, you long on this pair? Okay. Cool deal. All right. We'll see how it plays out. We'll see that CPI data comes in. All right. We'll see how that CPI data comes in. Okay. Any other questions on the euro dollar? Herman, I hope that helped. But the dollar is not a commodity currency, neither is the euro. Any questions on anything that we covered this morning? No? Benny, you got anything before we wrap it up, sir?
No, sir. Can't wait to see what happens at 8:30.
Yes, sir. Yes, sir.
So looking forward to reading the reports and everything that comes as a result of that data this morning. We know all eyes are on it. So I am looking forward to it. And other than that, man, great session as always. Great engagement, everybody, this morning. And I look forward to seeing everybody tonight, 9 p.m. Eastern Standard Time.
Yes, sir. Appreciate you, dude. So just wanted to look at this real quick. Right, the pound dollar pulling back, right? We'll see how it responds at the 618 retracement level here and deeper. See if we get that turnover and press to the downside. Okay. All right, everybody. Have an awesome day. Keep your eyes on your charts. 8:30, the CPI data comes out. We'll see what happens and how the market responds, and then we'll be able to determine what we do from there. All right. Have an awesome day. We'll see you tonight. Peace.
Have a great day, everybody.